In today's video, I want to share with you 1 minute scalping strategy that will change your trading results. And in this strategy, I have some rules before even we go into it, and I want to take you through the rules. There are 6 rules, and if you follow it, you can start immediately using this strategy. So without wasting any time, let's get down into the video. So our 1 minute scalping strategy has the following. First of all, I've tried this strategy on some pairs. You know, I love trading GBP AUD, GBP USD, GBP JPY, but it seems this strategy sometimes it does not respect these pairs. But when I try this strategy on Euro JPY, I find that it's going smoothly. So this strategy, first try it on Euro JPY. Yes, you can try on other pairs, but I find it working on Euro JPY smoothly. The other thing is that use 30 minutes time frame to analyze your charts. You need to use a higher time frame. You cannot just go to 1 minute and analyze the market. You need at least higher time frame, and in this case we'll be using 30 minutes time frame. The third thing, use 1 minute to enter the trade. That's why it's 1 minute scalping strategy, because in your 1 minute time frame, that's why you'll get the entry. And then number 4, we are using price action, no indicators. In this strategy, we don't have any indicators, we don't have any moving average. We are just using price action, and I will show you in a moment. And then number 5, if you want to use this strategy, you need to master high highs and high lows for buy opportunities. And number 6, if you want to use these strategies, you need to master lower lows and lower highs for sell opportunity. So for you to understand this scalping strategy, you need to identify a high highs and high lows, or low lows and low highs. And if let's say the market gets violated, it was making high highs, high lows, and then all of a sudden that gets violated, you come out of the trade. So guys, without further ado, let's get into the chart. So this is our chart. So this is our chart. So what you need to do, this is our Euro JPY on 30 minutes time frame. So what I see, or what you need to see, is where there's a rejection of, let's say, more than 5 to 7 candles. So as we can see here, we can come here, we can see there has been a rejection of so many candles for about 30 minutes. Remember, when you're in 30 minutes time frame, one candle represents 30 minutes. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 candles have rejected this zone. So that's one indication. That's what we want. We want to see a place where there is a rejection of these candles. The buy market is being rejected, and in our argument, we want to sell this market, because there's no way more than how many hours? Let me see, from this place all the way for 6 good hours, the price has been rejecting this zone. So we can have this as a small zone. We can have it as a small zone. And this zone, remember, it is the one that is guiding us to go to 1 minute and find an entry. And remember, when you are a scalper, it's just to enter the trade and come out of the trade. So now you have identified your zone, and you know this is a rejection. If this rejection was downside, let's say if it was on the downside, like it was here on the downside, we would be looking for buy opportunity, because the sellers have been rejected. Now the buyers are the ones who are being rejected. So we are looking for sell opportunity. So in this place, now you go down to 1 minute time frame, because you have seen your rejection. Now you're anticipating the price action, guys. Now here you are just anticipating the price action. So let's go to 1 minute time frame. So we are now in a 1 minute time frame. Remember, we were seeing some rejections on this time frame. You can see this zone has been tested about 6 hours. So when it comes to this place is interesting. First of all, it has touched how many times? it touched the same place, 1, and then it came touched again, 2, then it came touched the third time. This is what we are looking for. We are looking where 1 minute will touch the same zone, because this is the same zone more than 3 times. And then now we apply our price action. Guys, if you don't know about price action, it's something like this. So we have these 2 lines. So if buyers, if we are anticipating for a sell, we just need this. The buyers have pushed the market, they have created a new high, and then maybe the sellers took over, and then they created a high low. Then what we are anticipating is when the buyers try to push the market, they don't create another high, because when they create another high, it means buyers have more power in the market. What we are trying to see is when the buyers are unable to push the market and to take out this high, and they create a low high. This is our entry, guys. Remember, this market has been touched quite some few times, so it is 1, 2, and then we are now looking for the price action of a low high for us to enter the market. And this happens so fast because this is a 1 minute time frame, and as you can see, the buyers were coming to the same place, and this is a span of, let me see, a span of 50 minutes. So something happened so quickly, and now this is our area. So the buyers took this market up, the sellers did not take it down. So the minute the buyers try again, and they were unable to create a high. That's our entry, guys. And remember, in this strategy, you need to be very careful. If it violates any of the rules of high highs, high lows, or low lows and low highs, you just come out of the market. So our entry would be this point after now the red candle has formed. So let me just delete that. So our entry should be this point. After now this candle has been formed, that's our entry. And then our stop loss is this high, just above that high. And then remember, guys, we are targeting how many pips? 25 pips. So let me see how many 25 pips up to where. So 25 pips is up to that place. So when you're scalping, you just target 25 pips. That's our target. So I don't know if we could have hit our target. Yes, because you see, so that's what you need to understand. So you target 25 pips because the stop loss will be very, very small. It will be very, very tight. The stop loss was just how many pips? The stop loss was 6 pips. So this is something that you can try. It's a ratio, risk reward ratios of 1:4. So this is something that you need to try out, but you're just following price action. If we can see for sure, if we can first bring that down, you can see buyers, they continued to be weak in this market. So the buyer tried to push the market, but what did the seller do? The sellers continued creating low lows. And when the sellers are creating low lows, it means that the buyers have been defeated. So the buyers were trying to to come in the market. They were creating low highs, and that is where our confidence is coming, because this is price action. The buyers have been defeated. So because we are on the sell, all we need to see is that the sellers are continuing to create low lows and low highs. And at this moment, you see, at this moment, even after it hit our take profit of 25 pips, what happened? If you can see here, if let's say our take profit was way here, if you're following the price of action of high highs and high lows, you'll start to identify the sellers are being weak in the market. They are getting defeated, or they are not able to push the market lower. So when you start seeing this, and maybe your target was way down here, kindly close the trade, because it means the price action shows you what really is happening. So if that happens, if the seller starts taking the market in another place, like it's the sellers now, they are not able to create new low lows, new low lows, new low lows, and they are creating high highs, high lows, and the buyers seems to be strong, just come out of the market. So because we don't want to risk, you see it almost took half of your profit, but it continued to go down. So this is one of the indications to just come out and be safe. So guys, to be to just tell you about this strategy, it doesn't require indicators, it doesn't require moving average. All it requires is you to understand the power of high highs, high lows, and lows and low highs. That's all you need to understand. And you need first to go to 30 minutes time frame, understand where there is rejection, either on the supply or on the demand zone. It can be either way. Then you go now to 1 minute and look for a place where it is getting tested multiple times, and then now you look for your price action, for your either low highs, and for your low highs if it is sell, or for your high highs if it is a buy. So thank you so much guys, I hope you have enjoyed the video, and if you have not subscribed to my YouTube channel, kindly consider subscribing. Until next time, bye bye, love you.